computer. Okay. So tonight we're going to focus on the third secret in the shadow banking secrets. There's 3 secrets. There's the technical description of how risk-adjusted performance measures works. The second secret is how to set up a fund. The third secret basically is navigating regulatory compliance. So we're going to be talking a little bit about that over the next couple of sessions. But what's interesting is in the middle of this section, and navigating regulatory compliance, by the way, is the shortest section on the master class and in the book. It's barely 10 pages long, and it's definitely worth reading because in it, Ben goes through some of the traps that people fall into that get them in trouble later on. He also talks about the Woodbridge case study that didn't go well because they wouldn't listen to Ben, and they all ended up going bankrupt, and some of them even went to jail. But right in the middle of this regulatory compliance section, in these 10 pages, is a section that Ben goes into great detail in terms of how to set up, operate an investment club from a regulatory point of view. And this was one of the most eye-opening sections for me. You know, you guys have heard me talk a lot about investment clubs. It's because I'm going to do one myself, and I'm working on that. But investment clubs have some benefits, and a couple of the benefits that I wanted to mention is you get through an investment club. And that's, by the way, a Reg D 506 Section 506A offering. You can gain exclusive access. These are individuals who are either non-accredited or accredited. They can be little investors, they can be big investors, but they gain the exclusive access to the top 1% of the best performing alternative investments. In other words, they get access to Adagio and other other type of things. And of course, they get exclusive and valuable investment educational materials. And so there's a lot of benefits to being an investment club as opposed to, say, a Reg D 506B or a Reg D 506C. So I've talked a lot about investment clubs over the weeks, but tonight I want to go into a real deep dive as to what they are, what the benefits are, what the regulatory requirements are. And you'll be able to see that with a relatively few requirements, you open up this whole world to fund, you know, setting up and running a fund to yourself for a lot less and for a lot easier, I guess is what I'm going to say. And so I'm going to go to page 134 in the book if you're following along, and just go over with you tonight. And we'll talk about the rest of regulatory compliance in a future session. But I wanted to do this deep dive on the investment club, which Ben calls an underutilized feeder structure. So if you're thinking of doing a feeder fund, an investment club is a great way to do it. So, hey, Toby, welcome. And so, as I mentioned in the beginning, I'm going to do a really deep dive into the investment club structure and legal requirements tonight. So, hey, Tony, before I jump into that, I've hit a just brief breath taking place. Say, hey, what's going on?
Hey, what's going on?
Oh, we're getting into the regulatory compliance side of things tonight in the next week or so. And because Ben spends quite a significant amount of time talking about investment clubs from a regulatory perspective, you know, how to qualify and how to be compliant, I thought we'd do a really deep dive tonight in investment clubs. You know, normally I kind of gloss over it and explain it in about 5 minutes. And so I want to go into some detail tonight on what it is, because as I get to meet people in the community, I think more and more the investment club is probably one of the best structures to go for it and really get your first fund up and running. Future funds, you may not choose to do an investment club, but if you want to do a simple feeder fund or even a specific type of fund, and you want to get it up and running fast and easy and and not worry about some of the things that other types of funds have to worry about, this investment club really is the way to go. So there's the commercial for it. So we're going to dive into some of the technical aspects of it. You know, again, we've talked in the past about 506Bs and 506Cs and, you know, FINRA compliance and being, you know, licensed or not licensed, you know, and all this kind of stuff, you know, and Ben cuts through it all. He just cuts through it all there on page 134. And he says, the good news is there's a compliant alternative means to private securities issuers. And you can bypass the traditional financial distribution channels and go right to retail investors. And that is through a responsibly administered investment club. And so I think the more we as a community jump in and study this and practice it and utilize it, I think it'll be something that we understand easier and easier and can set up and be compliant. And not worry that, you know, if Ben and the SEC attorneys and whatnot are checking off the boxes and saying you're doing it right, and you can probably sleep at night knowing that you're doing it right. And so, and that's really the key to start with this, is that the SEC is granting us a really big window of exception in terms of all of this. And so, you know, my hope is that no one ever takes advantage of this in a way that is a non-compliant way and then ends up getting themselves in trouble. First and foremost, I don't want anybody getting in trouble. But second of all, you don't want people tainting the vehicle either. You know, if too many people go out there and make a mess of it, then obviously, you know, that bodes poorly for the rest of us who are trying to do things right. And so I'm just going to put that in there as a request that people will follow the rules and when in doubt, find somebody like Ben to get your questions answered. But that said, Ben starts out by talking about a few misconceptions about investment clubs. And again, by the way, as we get a few more people on here tonight, feel free to stop me and ask questions. If there's something that I'm saying that you want to probe into a little bit deeper, get a little more clarification, whether, please stop me, raise your hand, whatever, just holler, and I'll stop and we can answer questions. Because again, I want this to be as an in-depth dive as we can possibly make it. But anyway, getting back to 3 myths that Ben identifies about investment clubs. And so these are 3 things that are not true, and we'll talk about what's not true and then what is true in the inverse of these myths. The first myth is that investment clubs cannot advertise for new membership. Okay. The short answer for that myth is that if we follow the rules, we actually can advertise for new membership. And so that's really important, because a lot of people, you know, one of the first rules they hear in this kind of space is that you can't do general solicitation, or you can't advertise. They've got to be sophisticated, means that they know you already. And in this case, it's a myth. You can do it provided you follow the rules. And again, the rules are not that difficult. The second myth is that investment clubs cannot hold more than $25 million in assets. And the truth of the matter is obviously it can hold more than $25 million in assets. And again, I'm just going to defer to the rules there. The third myth is that investment clubs cannot have over 100 members. And again, being that it's a myth, we obviously can have more than 100 members. And so those are some constraints that you typically see in the other 506B and 506C constraints under the SEC rules. And yet under a 506A investment club, if set up and managed properly, you don't have those restrictions. That's why being an investment club has so many advantages over the 506B and the 506C. Ben makes the point of mentioning that the reason why a lot of people have these false perceptions about investment clubs is that because they don't, either read the rules or they just have a casual reading of the rules. And if you see in the book there, and I probably should post this, but there's a link to the rules so you can look at them and get very familiar with them. But, and again, if you don't follow the rules, then the SEC can structure the club as a securities. And if it's structured as a securities, you've blown it. and I'm being very kind there, because then they'll now regulate it as a security, probably under the 506B or 506C rules. And whichever one hurts you the most, that's the one they'll probably impute upon you. And so that's why it's incumbent that you follow the rules. But again, I want to stress that the rules are easy to follow. They're easy to understand. And so it's just a matter of being just somewhat diligent. If somebody breaks the 506A investment club rules, it's because you're trying to break the rules. So don't do it. But nevertheless, there are rules. So let's go into some of those. There's other benefits. For example, Ben writes, he says, the investment clubs, as recognized by the SEC, can be organized by anyone. So right now I'm assuming, I'm not FINRA licensed. I'm assuming Toby isn't, Anthony isn't, some of the others aren't, Jody isn't. And so there's no licensing required. And that's because there's a big exemption. And we're going to talk about what that is in a minute and why it works, and what we'll need to do. But the fund, as the investment club, also allows you to access the high-end, top-performing private securities that are out there. For example, to play in most of Adagio's investments, you need $1 million or more. And so as a fund, once you've aggregated, enough money to qualify in some of these bigger funds, you can now start participating in those bigger funds. And we're going to talk about what that looks like in a minute as well. So the licensing requirements, the fact that you can access bigger funds, you're compliantly aggregating smaller investors to be able to put them into the bigger deals out there. But now let's go into the legal basis for how you're able to do that. The first one is under the Investment Advisors Act of 1940, and it's section 2A11. It specifically states that teachers, and I read the word educators, are specifically excluded from the definition of investment advisor. Now, what does that mean? It means that in order to be an investment advisor, a licensed investment advisor, you need to be FINRA 65 licensed, right? In this case, they're saying, if you don't have a FINRA 65 license, but you are recognized as a teacher or an educator, then you can advise people to put money into a particular investment as long as you're a teacher or an educator. But there's some buts there. Okay, so here's where the compliance comes in. You've got to have an educational program that you're promoting or have developed. Okay, and that educational program has to treat the investment as incidental to the program. In other words, if I were to do this, in fact, this is what I'm doing. So I'll tell you what I'm doing. And I'm going to be working with Ben very closely to make sure this is compliant. But I'm putting together a personal finance program that ranges from topics like, think of me as kind of an online Dave Ramsey, okay? I've got topics that range from credit repair, how to manage your personal finances, to how to start a business, to becoming self-reliant through business or investments, things like that, how to prepare for your retirement. And so all of those elements are going to be in my educational program, and I'm going to include the Adagio educational programs as well. But they're all going to be, some are going to be free, some are going to be paid for with a nominal fee, but it's all about the education. And oh, by the way, we have over here an investment opportunity for you. Okay, see how that's incidental to the education? In other words, we're going to create a sales funnel, and the sales funnel is going to attract people. If you've seen the Russell Brunson sales funnel, but the Russell Brunson sales funnel is going to attract all kinds of people that are interested in this educational material. And of course, then once we capture them and we start introducing them to the educational products, then we'll be saying, oh, by the way, here's an opportunity for you to practice investing. And we have this fund over here that you can invest in. Okay. So maybe that idea there, and my fund is going to be a hedge fund. You can do any kind of thing. It functions as a feeder fund. So you can do pretty much anything you want. You can do real estate. You can do RV parks. You can do you can do life insurance companies. You can do, funeral homes and almond farms, anything you want. And in my case, I'm going to do a hedge fund. I'm actually going to be investing in the Adagio products, obviously, because those are the airbags in the fund, as we've talked in the past. But there's a lot of growth in those products as well. But I'm going to be focusing on more of a market-based stock product or series of stock products that are invested in the stock market. But my particular stock picks will be based on portfolios that are designed for things like disruptive technologies, bad times where people make money when the market's going down, contrarian investment philosophies, things like that. So essentially, it's where people are going to be able to get in and stay in, and yet the money is going to be actively managed to generate higher than normal returns for the investors. And then, of course, if we can get them, that 30% per year return, then obviously they'll be very happy. So that's what I'm doing. But each one of you can come up with your own theme in terms of what you'd like to do. I'll give you another example that Jody's working on. She's pitched this before, so I think she'll be okay with me sharing this. But she has some goals that she wants to accomplish in the humanitarian space. Some educational things, some helping have money going to things that are addressing major problems in the world, very big humanitarian causes. For example, groups that are fighting against sex trafficking, things like that. I mean, there's some serious stuff. And so anyway, what she's doing is she's creating kind of an endowment through the fundraising process that will actually fund some of these charities, some of these humanitarian groups, and at the same time return big returns to the investors. And so we call it social entrepreneurialism, where you're definitely making a profit, but at the same time, as you're making a profit, you're also submitting or donating capital to these humanitarian causes, these good causes. And so that's another twist on it. So anyway, the investment club can be done, for any purpose. And as long as you follow these rules, that you have this educational component to it, and that the fund is incidental to the investment club, then you're going to be compliant and you're going to qualify as a teacher, even though you are not FINRA 65 licensed, which is really cool. Continuing on, and again, feel free, hi Marilyn, feel free to ask questions or jump in with your comments as we go. And I mentioned that because it is an educational program, you can market that club, you can market its membership through traditional sales funnel online methodologies, and so I just wanted to make sure I restated that. So here's another one of the benefits for an investment club. And that is under the Securities Act of 1933, CFR Section 230, Reg D, Title 501A3, says that a business, and you can read that as a fund, like an investment club, that has aggregated $5 million or more can now be treated as an accredited investor. So imagine now, because you're a fund of funds and you want to be able to put some money, say, into Jody's fund over here that requires accredited investors only, because she set it up under a 506C, then basically what that means is once you have 5 million in your investment club, you might have 10,000 people in it, but you got $5 million aggregated. The club is now considered accredited, and you can go through your validation process and you'll now be validated as an accredited investor. The individual, those 10,000 individual members are not accredited. They still can't function as accredited, but as a club you can, which means you now can access those investment opportunities that are for accredited investors only. And that's a really big deal. That's a really big benefit. If you aggregate a total of $25 million into your club, then you get treated as a qualified investor. And so there's even more advantages that open up to you, because now you're going to be literally invited into the circles of the $1 billion club, and you're going to be playing at that level. Because, to be qualified, to get involved in some things, you have to be qualified, which means you have to have $25 million to play. And so that's what they're saying is that an investment club that reaches that size, that level, can be treated literally almost like a billionaire, or at least like somebody who has $25 million to invest, because that's what you'd be doing. So that's another key benefit. Now, one of the regulatory restrictions, one of the rules that you have to follow to make sure that you don't mess up, particularly under the guidelines of this Reg D 501A3 rule, Section 230, is that you can't put more than 40% of your fund total into a single fund. In other words, you can't look like you set up the fund, put your money in one specific type of investment. If you put more than 40% of your fund into one type of investment or fund, then the SEC assumes that you set the fund up for the sole purpose of getting into that deal. And they'll bust your investment club status, break you down to a security, and now you're facing whatever securities violations that you'd be otherwise facing. And so that's one of the key rules. But again, how hard is it to comply with that? It's going to be real easy. It's just don't put more than 40% of your total fund into one single deal, and spread it out and diversify. Do that kind of a thing, and manage it. Do your asset management in a way that doesn't cause you to break that rule. So I mean, that's not a big deal. Ben goes on to say, why is the 40% threshold important? And I think I've just explained it, but I'll just read here. He says that the club were deemed to be formed for the purposes of investing in any given fund. The regulators would look through the club to evaluate the status of its individual members, i.e. all these non-accredited people, right? And potentially force the fund to register with the SEC, which could be catastrophic for your fund. Because again, once they treat you like something else, because you are acting that way, then there'll be all kinds of penalties and problems for you. So make sure that you follow these basic, simple rules that I'm talking about, and you've got a great fund opportunity here. The SEC, according to this, the SEC in its publication, Investment Clubs in the SEC, dated January 13th, 2016, this is fairly recent, has specifically verified that membership in investment clubs is not a security. not a security interest, I should say, insofar as all members are active by vote in the decisions of the club. So here's another rule. The members of the club get to vote on the investments. Ben tells me that that takes on a lot of forms, okay? That the implementation of that requirement can look a lot of different ways. And so I would recommend that if you're doing an investment club and you're getting close to launching and you're still trying to work out the details of the rules in your subscription agreement or your operating, your LPA or your private placement memorandum, then get with Ben and talk to him about that and make sure that whatever explanation he gives you about that particular rule, that they've got to vote on the investments, that you're in compliance according to what Ben suggests. But I'll give you a couple of examples. Most everybody is familiar with proxy voting for stockholders. If you're a stockholder, say in Disney, and you've purchased even just a modest number of shares, say 10 shares in Disney, whatever that amounts to these days, or even 100 shares. Obviously, it doesn't represent the millions and millions of shares that are issued and outstanding out there, right? But what you'll get as a shareholder, registered shareholder with them, is you'll get an annual report, and those are really cool. That's almost worth having the stock itself. But you'll get an annual report, but you'll also get a little card in the mail that essentially says, vote on these issues. Think of it like an election ballot, okay? And we've got a few referendums that the shareholders need to vote on. So you get to vote yes or no or whatever, And then we've got our slate of directors that you guys are going to vote on for the next term. And so you get to vote on the directors that you want in there for the next term and so forth, right? It's called a proxy vote. You mail it back in. They tally all those mail-in votes. And based on, how all the shareholders voted, that's how the company moves. So in other words, the shareholders elect the board, they vote on certain referendums and so forth. And so you can probably picture that if you've ever been a stockholder in a public company or if you've ever voted in an election. Today we held our primaries in Missouri, and so I went down and voted in the primary. So it is very similar, right? There's the referendums and the candidates. So the point being is that there's a lot of things you can do. That particular technique, if you had a few 100,000 members in your club, may be somewhat expensive and maybe somewhat difficult to implement, but it's certainly an option, right? If you can imagine sending those out to everybody, maybe you do it by email, okay? But in it, you essentially can say, we have evaluated investment X, investment Y, and investment Z. We're prepared to vote on all of them, but we need a majority referendum that says, yes, go for it. So vote for the ones you want, and of course you give them some descriptions and some highlights and things like that. That's one way to do it. Another way that I think would probably be fun is that every time you have a new investment that you want to roll out into your fund or take advantage of, because we're going to be buying certain stocks or certain kinds of things, you could put on an educational webinar, right? Education, and talk about why this particular investment's a great investment. And then, as so often happens in live webinars, what can you do, Toby? Take a poll. and just take a poll. And if you get more than half of the people on the webinar saying, yeah, go for it, call it your vote, and away you go. So I mean, there's a lot of different things you can do to get people to vote. Ben said you could go so far to actually have them pre-vote in their agreement, in the subscription agreement, and basically say, I support management in all investment decisions. Boom, there's your vote. So, as long as you're running your vote in a way that's compliant, and you've made sure that you're not violating the rule in any way there, there's your vote. They vote for the investments. And that's, again, putting some of the educational responsibility on your investors to become, at least on the surface, aware of what's going into this fund portfolio. Right? Okay, I've already mentioned this once before, but I'll mention it again. You know, one of the biggest advantages of utilizing this investment club strategy is because you don't have the same restrictions as a security. You are and it's not registered as a security. You can do general solicitation and advertising for your investment club. And that's one of the biggest advantages right there, because again, if you're marketing on the internet, and you've got your educational program, you get that sales funnel full of thousands of people. And you know, if you want to talk about, you know, building sales funnels, then maybe we ought to have another discussion maybe next week or something. We can talk about sales funnels, which is totally off topic here, but what it does is it allows you to do general solicitation and general advertising to your niche, to your target investor market. But you can do that without violating any SEC rules. Again, the key being, make sure you keep the investment club rules. One other comment, so that we can be fully compliant in our conversation, is that every state also has unique SEC rules and registration requirements. And so make sure that as you're setting up this investment club, in compliance with the SEC, the federal SEC, that you're also checking out your state rules and following those state rules as well. And so really that is the essence of an investment club. We've taken a deep dive tonight to talk about some detail about the requirements and some of the possibilities. And so again, I think for most of us, an investment club, and you can use it as a feeder fund if you want, or you can, like I said, do anything else you want in there, but investment club is probably the way to go. Less expense in setting it up, faster to market. Yes, you have to come up with some educational content. But let me tell you how I'm doing that. And that way, if you're doing some financial educational content, you don't have to reinvent the wheel. You just have to offer the education. So one of the things I'm doing in the educational side of it is I'm offering probably a free ebook for starters, just to capture emails. I want to capture those thousands and thousands and thousands of emails out there, right? So that I can start nurturing the emails and bringing them into the club as a paying customer. And so it'll be some kind of overview of the investment club in terms of what is the education they're going to get, why it's important, how they can take advantage of the investment opportunity. I may also do some evergreen webinars that are free. And so you just shoot them out to an evergreen webinar and talk to them about it there. But then once they're in the club, now they're in the club and they're saying, hey, I want to join or whatever, or you have them join for a nominal fee or something like that. That can be part of your lead magnet. What I'm going to be doing is offering other products. For example, I have a credit repair product, several different credit repair products that I can offer. So I'm taking somebody who's really at the bottom of the economic rung. They're just absolutely overloaded in debt. They don't know how they're ever going to get out. They don't know how they're ever going to get their life under control. And so my first product is how to clean up your credit. Okay. The next product I have is a small, inexpensive course on how to set up and organize your personal finances. Again, very, very nominal cost, way more value in there than is available, but if you wanted to put something like that in there, I can show you guys where to get these. I didn't write them. They're done by other people. But what's really cool is that when they pay for those, buy those, you're going to, as an affiliate, you're going to get paid a portion of that fee back to you. In fact, in many cases, it's a big chunk of it, probably as much as 75% or more. And so it's a great way to generate club members, make some money so that it pays for your marketing costs, because that's really all you want it to do, is you just want it to pay for your marketing costs. And then there's some other things. I've got a self-reliance course that essentially I will teach, and that one I will probably archive evergreen training courses as I teach them, kind of like doing this, record it, and then make it available to them. There's going to be some how to plan for retirement. There's going to be stuff like how to buy life insurance. Anthony, that's for you, buddy. But and that kind of thing. But at the end of the day, we've got all this education, and some of it is new and fresh all the time, because that's what that self-reliance course is designed to be, new and fresh. Maybe have an accountability subscription so that people will pay to meet once a week and report in terms of how they're progressing. Those are very, very popular, and often products that command a really decent subscription fee. And then once you've got that platform of education, now you can offer your investment. You say, oh, by the way, we've talked about preparing for your retirement, we talked about saving, we've talked about investing. We have an investment club, and there's an investment component to this, and consider investing it. Okay, and then they look at that. You've got webinars that talk about that as well. Now you've got money coming into your fund. And of course, based on how you structure it, how you want it to be, you can do all kinds of things. I'll give you, for instance, Toby and I were talking with a potential client last week, and they're wanting to invest in RV parks. And one of the thoughts that I gave them in terms of the educational component was how to save up for the vacation, how to put your finances in order to invest in your vacation, because they have a philosophy: invest where you play. I loved it. Invest where you play, right?
That was cool.
So how about teaching people how to invest, educational component, so that they can go play in their RV parks? And while you do that, you can also have some fun videos or whatever out there that talks about, where the RV parks are located and all of the tourist attractions around those RV parks. And I'll give you for instance, and this is for you, Toby, in case you're talking to Dawn, but my son is a YouTube influencer. They have, I think, almost 2 million subscribers in all of their channels. And so they get invited. They got invited by Disney to go down to Disney World, tour the parks, all they wanted, as long as they were making videos, and then they posted the videos about what their experience in the park was. That was an all expenses paid trip by Disney, and they went down there and had a great time and did that. Just a couple months ago, the state of Arizona did the same thing for them. They actually paid them to go to Arizona in their RV, and they just traveled around and hit all the attractions, parks, all kinds of things. And the state of Arizona put them up, paid for their food, paid for their gas, paid for everything, all their entrance fees, everything to go do that. So, imagine if this group were, doing something like that, where, they hire, YouTube influencers like my son to go stay at their RV parks and go around and, tour the different attractions in the area and so forth. So I'm getting a little bit off topic, but I want everybody here to see that there are unique applications for whatever niche they want their investment club to be. I was just sharing with Anthony earlier, I didn't record this, but I'll add it here, and that is that we're working with a new product that Adagio is coming up with. I think I'm safe to say Ben is coming up with a life insurance product. And he's coming in essentially an annuity that could go with it. and so we've got a fund that essentially is going to be a life insurance equity fund, buying or setting up the distribution channels for this life insurance product to funnel through that fund and out into the masses. And so there's another example. Now, whether we do an investment fund with that one, investment club or not, I don't know what we'll end up doing. But the point is you can set it up as an investment club. And so I guess the challenge this week as we go into, and we're going to have another week where we're talking about legal compliance, it's basically, driving the hearse up and making you smell the roses in terms of what will happen if you don't. But essentially, take this deep dive into a couple of things that you should do if you haven't done them by now. And that is, be thinking really hard about what kind of investment club you want to set up. Okay. What do you want to specialize in or not? You don't have to specialize in anything. You can be a fund of funds, but you can specialize in whatever you want to specialize in. Be thinking about that. What kinds of things? I've given you lots of ideas. So be thinking of what kinds of things would you want to invest in if you were investing, and then wrap your fund idea around that. And then, go back and review the technical material that we've been that we've made available. The fund options there, whether you want to do an A, B, or C, but I'm suggesting very strongly that you look at the A. And then, start going to work on it. As I've outlined for some other folks, start playing with a pitch deck. In other words, how would you present this to an investor? There's a couple of ways you can do pitch decks. You can definitely write them up in the traditional sense, make a PowerPoint, right? But why not make it an ugly white PowerPoint and turn it into a video, right? Obviously, you can make it as pretty as you want, but look at how you would pitch this to investors. And remember, your audience is your investor. So write to your audience. That was a big one, by the way, that we talked to Ben about today and last week. I wondered, for many, many months, why Ben's investments, his funds, his pitch decks were so technical and hard to understand. And he admitted that, he's been going through the marketing rigor and all that kind of stuff, and maybe they're a little too technical or whatever. But by the same token, it's very clear that Ben is writing to a certain audience. And to bring it down to a certain level, let's say we bring it down to a college freshman level of understanding, basically is saying, oh, the investor that I'm looking for is no smarter than a college freshman. Okay, and so I'm not saying write it up to the PhD level, with all due respect to Marilyn, but if that's your audience, by all means do. And if your audience is a blue collar worker at a Nestle's food processing plant, then write it to their educational level. Okay, it's whoever your investor is, write it to their level. And so you write the pitch deck, you write your 2-page summary. Those are your 2 marketing documents. Write up, get a soft commitment letter. And, we've made those available to anybody who wants one. Just reach out to me if you'd like to get one. We'll get one sent over to you. And then once you've done that, start pitching it to your investors. Start practicing on, I don't know, family, friends, and fools, and see if what kind of reaction you get. Go to your network and see what kind of reaction you get. And one of the key closing statements that you want to practice is basically, yeah, Tony, I'll get one out there for everybody. I'll probably put it in the community. So yeah, I'll make that available. Practice this closing statement on the soft commit letter, because a lot of people say, oh, gee, I'm interested, but if you guys would just do this, this, or that, I'd be more interested in. Okay, so here's your closing state question that leaves your foot in the door, okay, as they tell you no. And that basically is, if I can make the changes to this investment the way you're suggesting or the way you'd like, can I put you down for, and give them a dollar amount? Maybe you're expecting 50,000, maybe you're expecting $1 million. Okay, so if I can make the changes to this that you're looking for, can I put you down for $1 million? Okay, they make an emotional commitment at that point. The soft commitment letter is not legally binding. Okay, you can't take it into court and force them to perform, right? But what it does do is it creates an emotional commitment on both of your parts, right? That they're a good investor and that they think this is a good deal. Okay, and they may still back out. At the end of the day, there are people who do that. But if you've collected 50 letters and they're all committed from anywhere from, who knows, $50,000 to $250,000 each, then you've got a good sized fund that you're ready to start. So at that point, you now go in and complete your limited partnership agreement, set up your limited partnership if you haven't already, but write your limited partnership agreement and write your PPM and get your subscription agreement done. And now you're ready to go back, and as long as it's compliant and you're ready to pull the trigger, then you're now ready to go back and start collecting on those soft commitment letters. And so that's really how it should go. I don't think you need to be putting a lot of time or expense into your limited partnership agreement, your PPM, or your subscription agreements when you're not quite sure yet what you're going to do. You're still doing a lot of market research, you're testing it on your network. And so it doesn't make sense to go and pay an attorney huge exorbitant sums of money to generate a legal document that you're going to ultimately go back and change, right? And that's only just going to cost you more. And so you can control that legal cost, probably keeping it down to about 1/3 of what some people estimate it would cost, simply by testing your market first. Don't take anybody's money yet, just do a soft commit. I guess if Ben said it this way, he said, if somebody's offering $1 million, you'll want to pull an all-nighter and draft your LPA, your PPM, and your subscription agreement, get it to them the next morning, right? But by the same token, that's rarely going to happen. So just collect those soft commit letters, and then when you've got enough of them that you think you could launch a pretty decent sized fund, then take a couple of weeks and tell everybody, say, hey, get them all on an email blast list or whatever. Say, hey, we're 3 weeks out. I'm now going to finalize the limited partnership agreement. I'm going to finalize the subscription agreement, and I'm going to finalize the private placement memorandum. And we'll have those back to you in 3 weeks, and we'll talk about moving forward from there. And so there you go. That's in a nutshell. And again, I'm guilty of oversimplifying, but that in a nutshell is what you'd be doing. And so it's good to keep learning this material. Ben wants us to learn the material. He says, he's repeated over and over and over again. He goes, I want people to know this like the back of their hand. So, go back in and study those sessions that we recorded. And I'm going to speak to that in a minute. And then, study everything Ben puts out, study the book. When you've read the book 3 times like I have, and taken the master class 3 times like I have, done both the recording and the book, you'll get to a point where things will start sinking in. And it takes some time, it takes some commitment, but it will also help you when you're setting up your fund. But I think what we'd like to see in the community now is more and more people setting up their funds and talking about their funds and pitching their funds here, and doing all those kinds of things that lets us see that you're actually taking some forward steps. I think it's a beautiful thing to behold. So anyway, that's about all I have for tonight. So I'll shut up. Anybody have any questions or comments, or they want to talk about the investment club or concept or whatever?
I agree. It's the best one. Just because you can market it publicly
Mhm.
and less regulation.
Yeah. Just out of curiosity, Toby, we haven't talked much about this, but you do internet marketing, so I'm pretty sure you're very familiar with the sales funnel concept. Are you familiar with Russell Brunson and what he does? Ben
Yeah.
talks about him a lot. Okay.
Yeah.
So you're very familiar with that. How confident are you in the, shall we say, the Russell Brunson concept? And I don't mean it as the Russell Brunson program. I'm talking about his approach to setting up sales funnels and doing the attraction marketing and all of the things that implies. How do you feel about that concept in terms of generating huge lists of people that you could bring into an investment club?
Well, that's the other reason I like it, because that's just good marketing versus promoting that you have a fund or an investment. It's kind of just going for the kill right away. That's like asking the girl to get married on the first date.
Mm-hmm.
Whereas with Russell Brunson, you're promoting your webinars, your educational content, and that's the stuff people want. That's kind of your sugar or whatever,
Mm-hmm.
to attract people, the honey.
Yeah.
And then, like you said, the investments secondary. So
Yeah.
by the way, we have this over here.
Mm-hmm.
You've already established yourself as an authority by putting on the webinars or whatever educational content. You've established trust, and people get to know you, and that's who people like to buy from.
Mm-hmm. And again, I want to emphasize
better approach.
The educational content does not have to be your own. There's a lot of good educational content out there that's available for nominal cost that you can offer at that nominal cost and get an affiliate fee back. And so you can monetize your list long before they invest in your investment club. You can be making money off of them. I'll give you a case in point. And maybe this will raise some eyebrows, but when Ben sells his book and his master class, I think he sells it for $199. If you're a finance associate with Adagio, and you all should be because it's free, right? If you're a finance associate and you sell that book and master class, he pays you $135 for selling that one book and master class. He's set up the sales funnels. So the sales funnels are already there. He does it through Russell Brunson. So all you need to do is drive traffic to your funnel, because you're going to have an affiliate number, a unique identifier. And so everybody that you drive to that funnel, Adagio takes over and runs them all the way through to completion in terms of the sale, but you get paid. And you get paid $135 per person that that buys the class. Now let's put that in a big scale. Let's suppose, and Toby, tell me if these numbers are realistic, but let's say you just go all out. I mean, just all out, as they say, to the wall. And you're marketing this thing and you bring in 1,000 people a month. Is that conceivable? I mean, do other people bring in 1,000 people a month? Maybe 500.
Yeah, sounds like a lot, but you could, depending on the content and how much you're spending on advertising.
How much you're putting out there for advertising, things like that.
Depends what your budget is.
Yeah, but how much does that represent? If you get 1,000 times $135, you do the math. I mean, would that be worth an advertising budget of $5,000 to $10,000 a month?
Yep.
Yeah.
Easily.
And so, and if you're bringing in 1,000 new people into your club every month, and now after making, obviously paying for the cost of bringing them in easily. Now you can bring them in and then bring them into your marketing or into your investment club and say, by the way, here we go. There's the investment club. You don't have to wait for them to go through all of the education first. You just simply offer the education. You create a library of education of that content, and they can go through it at their leisure, however they want. And one of those line items or one of those things in that library is the investment club. Come join. So it's incidental to everything else. Are you starting to kind of get the mental picture of what that could be for you? What do you think, Tony or Marilyn, either one of you?
I'm liking what I hear. It's been a while, Mark, as you know, it's been about several months. I'm trying to get back into the swing of things. I went back, reviewing the chapters and all of that. Tonight was very, very intriguing. Again, it helped to just embellish, some of the reading. I wanted to go back, I guess, to a couple of things. One, you were talking about, I believe it was becoming a finance assistant. And how to do that.
Yeah,
I think I saw that early on, but again, I've just been disconnected.
In the community, and you might have to scroll down a ways, but in the community, you can find the marketing overview. It's the Adagio marketing overview. And there's also instructions. I think there's even a link to the financial associate page where you apply to Adagio to be a financial associate. Now, the application is really not that big a deal. I mean, it's just a half a page of information and you're automatically accepted as a financial associate. Doesn't require licensure or anything like that, because what you're marketing for Adagio at that point is the education. And so there's no licensing required for marketing education. But this is the other beautiful piece of it. You can take Adagio's education and adopt it as your own in your own investment club as an educational component, right? And so, all the education can be done for you. You don't have to come up with any original content, only to the extent that maybe, if you decide to nurture your own group, right? So you are nurturing all the people that come into your club. You can hold, weekly meetings. You can hold meetings as often as you want. You record them like this. You post them up onto your website, and boom, that's fresh content that they're learning more about the financial aspects of the investment club and all that kind of stuff. But other than that, the stuff that you're selling or whatever, you can package that however you want. It doesn't have, it can be done for you, meaning that it's already existing out there. I don't have an original bone in my body. And so I'm going to be simply setting up products that I've tested, that I like, and that I can refer. And that's basically all I'm doing, is I'm saying, hey, I'm referring this particular product to you because it works. So if you need credit repair, buy this product, it works. If you need this, that, or the other thing, buy that product, it works. And then I'll get an affiliate feedback.
It's interesting because I had just started to put a credit repair product together myself based on some needs. So as you were talking, you basically were talking my language.
Yeah. So that's good. Did you have another question? I kind of jumped in and answered your first question, but did you have another one?
The second one, you were talking about the investment club, and maybe you might be doing something by way of webinar, and there might be questions there, or you have the opportunity of just having folk vote on the webinar. So my question was, do they have to be members in order to vote?
Yes. And so this is a different kind of webinar. It's going to be more of a meeting kind of like this, right? Kind of like ours, where you can structure it as a meeting, you can structure it as a webinar, but the people that invited are only your club members, not the public at large, right? Because the purpose of the webinar is to educate them on specific investments that you're planning to invest in, and you need their support. right? Because one of the rules is that they get to vote. And so what you're doing is creating an opportunity for them to vote. And so you get on there, you talk about the investments. You say, this week we're going to talk about investment A and investment B and investment C. Here's all the details that we have on it. This is why we think it's a good idea. Go back to the lessons that we've taught about investing. You talk about risk-adjusted performance measures, and all the things that we're learning, right? And you make a good pitch for all three investments, and then you say, let's take a poll. How many of you guys give a thumbs up to investment A? And then you run the poll on your meeting or your webinar. There's polling, capabilities on most of those. And so you get a poll. And if you've got 1,000 people on and 600 people say go for it, then you've had the approval you need, right? If you need to have that kind of a vote. And the same thing then for investment B, do the same thing. Investment C, do the same thing. The beautiful thing about that is if you record that now for your investment club members, that meeting is an educational meeting. I mean, it's all focused on the education because you can put it up there and archive it and people can go back and listen to it and watch it again and again as they need to. And so, not only do you have content that's done for you that you can sell and get paid to sell, but you now have your own content that you can curate. And if you want to, you could sell that as well, or you could sell it as a subscription or whatever you want to do. But the idea is to monetize as much as it makes sense to monetize so that you're paying for your marketing costs and a little extra to boot. And then the real goal is to get these people to seriously look at the fund.
Now I have an LLC that's already established. It's not a nonprofit though. However, it's structured that I can do other business. Okay. It's very specifically geared that way, and I wanted it to be that way. So the question is, given that we want to be very, very careful that whatever we do is deemed education, would it be safe for me to be able to continue to use my existing LLC? Basically, I want to, it's like I'm in a beta phase, if you will, in development, you know what I mean? And so I've always been kind of, I'm multifunction in different areas. And so I'm trying different things, okay, from real estate to leadership development, coaching, credit repair comes under the economic empowerment piece that I'm looking at,
Yeah. So
any thoughts on that?
Yeah, let me give you a few thoughts. First of all, I want to make sure that everybody's clear on this, is that when you're setting up funds and you're getting into this realm, you're going to be setting up a lot of LLCs before it's all over. You're going to have several at your fingertips just to kind of get started into this. And so I want to describe a little bit about what that looks like. So your current LLC, you may want to set it up at the top and make it a holding company, something to that effect, so that you don't have necessarily direct business operations going through that LLC, unless of course you want to. I mean, you can do anything you want, but you're going to be building a little bit of an empire here. You can also get some DBAs if you want to work through that LLC, and I've done this. Where I have some related companies that are different enough to be run separately, but related enough to keep it under a holding company. And so I'll set up DBAs. So, I'll set up, Mark Beach's holding company, and then I'll set up, Mark Beach's credit repair, DBA, as Mark Beach's holding, or doing business as Mark Beach's credit repair, as a DBA of Mark Beach's holding company, right? And you can set up any number of DBAs under that holding company that you want. When you get into the fund world, you're going to want to set up some separate LLCs, however, not just DBAs, but LLCs. Because when you're setting up your fund as a limited partnership, you're going to go in as a general partner. And that general partner needs to probably be an LLC. Should it be your LLC that's the holding company? I suppose you could do that. But, you know, if you try to pile so much into one company, you get to a point where everything becomes kind of enmeshed and entangled, right? And so it probably would be a really good idea to not use that as the general partner in your fund. So there's LLC number 2, right? And a limited partnership. So that's entity number 3, because your LLC number 2 is the general partner in a limited partnership, which is also a company. So there's actually 2 companies being formed there. Now, one of the things that we're discovering as we're going through all this material is that you may decide that you want to work, let's say you want to work with Anthony, okay? And so you both are setting up the same fund, you're working together to do this. This is what I'm doing with Jody, and I'm doing something similar with Toby, and you know, and possibly some other people. But in that case, the general partner is you and Tony, okay? You and Anthony. And so at that point, you're going to want to have an LLC that's called the general partner, but then each of you are going to have co-ownership in that general partnership, which means it will be owned by yet another LLC. So I don't really have time to break out the whiteboard and draw the picture for you. Maybe we'll have a discussion on this another evening, because I have done that in certain instances in some of the presentations that I've done, but I've literally drawn boxes. I stay away from circles, but I do boxes pretty good. But anyway, be that as it may, then you know you each would probably have a separate LLC, which is the joint owner of the LLC that is the general partner for the limited partnership. See how this is starting to layer up quick? And so just keep that in mind. And it's not expensive to set up these LLCs. You can go out on one that I like particularly is LegalZoom. LegalZoom is fast, easy, and cheap.
Yep.
You know, for less than $200, you can have your company set up that day. You know, that minute.
Well, I'm in Massachusetts, so everything is at least $500.
Okay.
Just,
if you go on
just for the state.
LegalZoom, it won't be 500, which is good. But anyway, and there's another one that's even a little cheaper than LegalZoom that I've used. I just don't remember it off the top of my head, but I'll find it and post it out there in the community so that people can look them up. I have to start doing that. I need to start adding more resources out there in the community. But anyway, I hope that answered your question. That as you think through strategically what you want to accomplish, you know, LLCs are easy enough to set up, cheap enough to set up, fast enough to set up, that you can set them up for just about any purpose. Depending on the state you're in and the cost of setting up the LLC. I know a lot of real estate developers who own multiple real estate properties. I mean, in the hundreds, and each property is in a separate LLC, just for asset protection purposes. So you can get as you can get as crazy with it as you want. Yep, you can also use trusts, but you can get as crazy with it as you want, if that makes any sense.
It makes a lot of sense. I will need professional help though, and you know, in going forward this trip. But what I really want
to use the community to ask for some initial help. I know they're not the necessarily the professional help you want. There's a lot of people in the community that if you have a simple question like, you know, should I set up an LLC in this situation, or should I structure it, you know, like this? You know, what should my legal structure be in this situation? There's a lot of people in the community who are very knowledgeable, who are willing to help you for free. You know, as long as you recognize that the value of the advice is what it cost you.
Yes.
So, but yeah, you can get some good advice, and you kind of go, oh, I like that, and you can go with that. And you know, the beauty of this legal structuring concept, even though you may want to get some professional advice, is that, and I've done this for, you know, dozens and dozens of clients over the years, but the answer is always yes. You know, they say, can I fill in the blank? Yes. Can I fill in the blank? Yes. You know, in other words, you can do whatever you want. And the key there is you just got to make sure that you follow the rules, that that you do the things that, according to the proper way of doing things, pay your taxes, all that kind of stuff. And the answer is yes, you can do pretty much anything you want, however you want, as long as, the structure fits. Are there better entities than others? Depending on your goals, yes. But depending on other goals, what difference does it make, right? And so you have to understand what your goals are and the impact that might have. I mean, if you're trying to do certain things for a tax planning standpoint, you definitely better be talking to a tax guy or gal, okay? But if it's, oh, gee, am I setting up this structure properly to accomplish a fund? Yeah. Don't sweat the details too much.
A thought that comes to me. I know you were talking about the $1 million. If someone gave you that right off. But I'm thinking more of, let's say, broader population. And first off, like I said, I have the education in mind. And I'm thinking again from the empowerment perspective, where, and
As
I
am
guess
I.
I'm wondering, okay, could a club be set up where it's more like regular funds come in, like a savings, so to speak, that then can be used later for investing? But right now, my focus would be if the draw is education with bringing monies in. Maybe there's something that they can see as a benefit, but right now, there's that, especially in the midst of a so-called recession,
Right.
where they're able to see some opportunities for building assets. Okay. Hopefully one of those becomes a club that creates a fund.
So I'm going to give you a homework assignment, Marilyn. Go check out a website called acorns.com.
Okay.
Acorns.com. And I'll tell you what it is when you go out there to check it out, and don't go out there now, wait until later, because you're going to spend some time on there. But what it is it's exactly what you're describing. In this case, what they're doing is they're getting people into the habit of just saving by rounding up their expenditures when they buy something online or when they write a check, or they can set a certain amount like $5 a week. Okay, so I mean, anybody working at McDonald's can do this, right? And what they do is they have a micro account that maybe only has anywhere from $50 to $500 or more. They can have a lot more in that account if they want. But what they do is they take that money and they put it into mutual funds. Okay, now nobody here is recommending mutual funds, but if you're wanting to create up a habit and a savings vehicle that's going to pay out more than a passbook savings account, right? And get somebody in the savings habit and get a fairly decent return, then maybe this is a great idea, okay? And guess what? If you offer that as an educational component and say, go out there in Acorns and open an Acorns account, we're going to show you how to do it, and you're going to practice learning how to save. And then every time you get a couple $100 in this Acorns account, move it over into the investment club, right? Which you'd run on a similar basis, okay? But what it does is it gets people in the habit of saving and then turn around and investing. And you can offer all kinds of educational discussions about that very thing. But what it does is it literally puts that $5 a week or that 50 cents on every roundup into this fund that is a mutual fund. And you can pick your mutual funds. In other words, you're teaching people how to invest in mutual funds through this thing. But instead of doing it, hundreds of dollars at a time, they're doing it literally 50 cents at a time. And so check out Acorns. There's actually, for everybody that you have go out there and set up an account, Acorns will flip back some money to you as an affiliate. And so even that referral can get you paid. And again, now I'm not getting paid off of this referral to you guys because I'm not giving you my referral ID, but nevertheless, just go check it out. And I do it not because I'm serious about putting money into mutual funds. I can do that through my investment account. but I just do it to tell people that I'm practicing what I preach. And so I do it. And I put, you know, I do the roundup and I put maybe $5-10 a week into that thing is all. And, you know, everyone, and I use it as an emergency fund. So, you know, we'll be teaching people about how to save for emergency funds. It's, again, a great way to do it. And then, you know, pull it out when you need it in an emergency. Or what I'm doing is I pull it out every time I get a balance big enough to move it over into my investment account and invest it, you know, in a serious way. But, you know, those are some of the kinds of things you can do in terms of micro, call it micro investing, you know, because you're investing a buck at a time.
Oh, that's powerful.
Mm-hmm. Yep. Especially when you're trying to empower people. And that's what this education is all about. It's all about empowering people, you know, and even when you get into the investing side of your investment club fund, you know, your fund side, you're still educating people and empowering people, because the goal there is to bring down, you know, the investments of the 1% and making them now available to the 99. And that's big. That's powerful.
Awesome. I don't want to, you know, hog the show, if you will, but there's something that comes to mind. Again, I hear there's, I don't know if it's something pending as a bill related to basically the transition of our dollar, of our money into digital, you know, digital asset or digital coin, if you will. Do you know anything about that? And I guess my question is, what
I've
would
only
be the
read what you've
relevance
read.
to this? All right.
I've only read what you've read. I don't know much about it beyond what you've just described. But yes, I do know that it's there. I know the trend is fast upon us. I'm a big fan of Jim Rickards and Nomi Prenz. I don't know if you know who those guys are, but
I do. Yes, I do.
they're talking about it. I just need to go back and review some of the written content and video content that they put out on it. But Rickards, he comes out of the CIA. He comes out of very high level governmental positions. He's in a position to know. He says it's happening. I believe him.
Okay.
And so, is it a good thing or bad thing? I'm not going to opine on that. I mean, personally, I don't like the idea. It causes more problems than it solves. You know, a lot of people are saying, yeah, but it gets rid of organized crime. It gets rid of the drug guys and the sex trafficking guys. And while it might, I doubt there's going to be enough loopholes in it. I doubt that it will stop what they're doing. But what it'll do is it'll probably affect the rest of us. And so, as most of those things are designed, you know, and I mention that because from an economic standpoint and probably a political standpoint, and I know Ben and I share a lot of the same conservative, I'll even just label it libertarian economic points of view, you know, it's not a good thing in that sense. But I can't really go into much more detail other than that, because if you look at it, and you got a background in economics, Marilyn, but you know what a lot of people aren't talking about today. You know, and we can liken this to the crash of 2008. We're going into another one. What people aren't talking about is what really causes inflation. You know, you say, what is inflation? You know, and they'll say, well, it's, you know, the grocery store raising prices, or they'll say it's the labor unions demanding more wages, you know, prices going up, you know, and so on. And that's not inflation. Those are the symptoms or results of inflation. The cause of inflation is borrowing on the fractional reserve banking structure. It's government borrowing. It's people, you know, borrowing, you know, in the fractional reserve sense, because every dollar you borrow creates 10 more dollars into the system out of thin air in most cases. And so the act of borrowing is what is inflationary. The act of printing money out of thin air is what is inflation. And it creates the situation where, you know, most of us economists, our armchair economists say, yeah, the definition of inflation is too many dollars chasing too few goods, right? Read that right out of Economics 101. But what causes those extra dollars is not somebody asking for more wages. That's a result of somebody putting those extra $10 for every dollar borrowed into the system. And so what does this have to do with digital currency? You can inflate that in currency up to Zimbabwe levels, and you don't have to have an act of Congress to do it, and that higher costs, that effect of higher costs now, which is the result of inflation and the devaluation of the currency, that now becomes the hidden tax that these people that we want to empower have to pay. Every time they go to that grocery store and they're paying, $2.50 or $3 for a dozen eggs, when it only cost them $1.25 before, that's them paying that hidden tax. And so we talk about empowerment. We've got to empower them outside or beyond inflation. Out beyond the effects of inflation, just to keep my conversation pure. We've got to empower people to go beyond that, or otherwise, we're literally obliterating our middle class to the point where there will be only two groups of people in the future: the new rich and the new poor. And these funds, guys, this is the key to making sure that we can empower people to move into the new rich category, even though they have to work hard at it, but they're not going to stay in the new poor category, because that middle class is right now getting torn apart, and that's where they're gravitating toward. They're either gravitating toward the new rich or the new poor. And so all of this empowerment that we're talking about for people of all economic levels, going up to the level of the new rich, is to get them up into that category so that they can not just survive, but thrive going into the future. So if you need a cause-driven mission, if you need a cause celeb to doing this, there it is. It's empowerment, like you say, Marilyn, but why do they need to be empowered? It's so that they're not living on the streets in the next couple of years. Because you're going to find people that used to live in very nice homes now living on the streets, as it were. I mean, not necessarily, in a sleeping bag in a cardboard box, but, they're going to be pitching tents in some farmer's field, which is effectively living on the streets in the rural sense. And we have people like that. They're putting up lean-tos and wherever they can get permission to put them up. And that's still while they're working. This will be the working impoverished. Not just the working poor, but the working impoverished. And I don't mean to say that to scare everybody. I hope that I'm inspiring people to realize that we have a cause here. We have a mission and a purpose. And Marilyn, you said it perfect. We're here to empower people through the education and through the opportunities that we're offering through that education. So I hope that for everybody that hears this today and hears it in the future, set it up right, do it right, because you're going to have a lot of people that are depending on you, and you can't, for their sake, don't take shortcuts. That makes sense. Did I say that right, Marilyn? You're the economics guru.
No, that was perfect. What you did was articulate my heart, what I've had on my heart for many, many years. And it's basically just like a convergence point where I'm at. Actually, that's a bit of a book I'm hoping to get out as well. But, and I guess the other part of that, the other piece of that relates to me is clearly educating the masses, if you will, okay? Because whatever is done has to be done in fairly short order.
Mhm.
if all these things are coming to pass, because these bills are passing with
They
people
are.
just being asleep. People don't even know what's going on.
Yep, they are. And so that's why I'm trying, my whole undercurrent in this presentation tonight was to, all right, guys, we got to hurry. Time is short. We got to hurry. Don't take a lot of time trying to study this until you understand it 100% correctly. That will come in time. But just fall forward, make mistakes, do your best. One of the things that I have learned is that Ben is very generous with his time. And so as a consequence, I'm also committing myself to be generous with my time. And so if you've got questions, post them out there in the community. I'll see them. I'm out there every day. And I'll either get you an answer or I'll find an answer for you, or somebody else will come along and see it and answer it for you, but you don't have to wait long to get an answer. And then, so use that forum as your mentor and your coach. Use these forums as your mentors and coaches. Save your time for your most important questions or your most difficult questions. Or if I say, hey, you might want to talk to Ben about that one, then use your time with Ben that you've got there coming to you as a part of the master class to talk to him. Like I said, he's very generous with his time. I'm amazed at how generous he is. I've been on this last month, I've been on the phone with Ben for an average of an hour a week for the last 4 weeks. He gave it to me. I didn't pay for it. And I'm not saying that that's something we should all do, because I don't want to inundate him necessarily with things that we as a group can collectively come to an answer or a solution for you. But exhaust the community and then save the big ones for Ben, so that you're not taking advantage of his generosity. But he is generous.
Thanks so much, Mark.
Okay. Anthony, before we go, do you have any parting comments, or Toby?
Nope.
Okay. All right, guys. Well, let's stop the recording on this and we'll say good night. I'm going to stop the recording.